Hello everyone, welcome back to our channel. Today we are gonna dive into how manufacturing business or service business track their profits. We'll try to explore the trading and profit and loss account, which is like a financial health report for companies that either manufacture or trade products and services. Okay, it might sound a bit technical, but we'll break it down in simple terms so that we all can understand. Okay, firstly, what is a manufacturing account or what is a trading account? What is manufacturing? Trading. Okay, now trading basically means buying and selling finished goods. Okay, they can buy and sell finished goods, that is called trading. Manufacturing actually means creating the products that they sell. They basically buy raw materials like say steel, plastic or fabric, and then they process these materials using machinery and labor to make the final product. Okay, now the trading accounts comes in when they buy these raw materials and sell the finished goods. All these manufacturers or traders' main aim is to sell these products for more money than it cost them to make them. Okay, the ultimate aim of any businessman, any manufacturer or trader is to make profit, make more money than it actually costed them to either make them or to buy them. Okay, now to understand their financial performance, manufacturers use certain specific terms. Let's basically look at some of the important ones. Raw material. I hope the word itself tells you what it is. Okay, raw materials are the basic ingredients which are needed to make a product. For example, if you are making clothes, cotton would be a raw material. Okay, if you are making say plastic bottles, plastic will be a raw material. Okay, then direct expenses. Now these are costs directly linked to making the product or directly linked to make the product saleable. Okay, like think about the wages paid to the workers on the factory floor. They are directly involved in the production. Okay, so these are direct expenses. Next is indirect expenses. These are costs that aren't directly tied up to making a specific product saleable, but are necessary to run overall business. Okay, after the manufacturing is done, there are a lot of other expenses which are not involved directly with production, but to make it saleable, we make them these expenses to run the overall business, day-to-day business activities. Examples could be rent, salaries of marketing expenditures of marketing executives, advertisements. These will all fall under indirect expenses. So indirect expenses are costs that are not directly tied to production, but they are necessary to run the business. Okay, now cost of goods sold. Now this is a big one. You have to understand this. Cost of goods sold is basically a big one. It's the total cost of producing all the goods that the company actually sold during a specific period. Okay, it's the cost of producing the goods that were sold during a specific period. It includes say cost of raw material, the direct labor and other direct manufacturing overheads. Okay, that is cost of goods sold. Next is gross profit. Now this is your initial profit. Gross profit is what is left after you subtract the cost of goods sold from the total money you made from selling your products. So gross profit is basically revenue from sales, that is total sales minus the cost of goods sold. That is your gross profit. Okay, so any businessman, manufacturer or trader, why do they basically run the business? To make profits. So gross profit basically will tell you if you are doing this business, if you are trying to do this business, will you make profitable or not? Will it be profitable or not? So cost of goods sold is important. Okay, so sales, whatever total sales we made minus the cost of goods sold is your gross profit. That will also be calculated during our trading and P&L account, which I'll explain in this session as well. Okay. Next is operating expenses. Now these are indirect expenses, the expenses which are the costs which are used for running the day-to-day operation of the business. Okay, like the salaries of the office staff, the marketing cost, the sales commission, all of these fall under operating expenses. Okay, net profit. This is the bottom line. Okay, this is the final profit of the company after deducting all expenses, both direct and indirect, from the total revenue. Okay, net profit is sales, that is total revenue, minus all expenses, both direct expenses, indirect expenses. Only after deducting all this, you will find how much net profit the company made. Okay, now let's actually look at the first part of the financial statement, which is called the trading account. Now this account helps us figure out the gross profit. It basically takes into account all the direct cost associated with producing and selling the goods. Okay, just take a look at the table once, the account, the trading account. What do we have there? On the debit side, we have opening stock, the present stock, opening stock. Then whatever we have purchased, if it is a manufacturing company, the raw materials. If it is a trading company, the finished goods purchased, it will be taken here. Then all the direct expenses, like the direct wages, okay, direct labor, electricity bill of the manufacturing factory. If it is a factory, even the electricity bill of the factory will be direct expense. Okay, those will be on the debit side. On the credit side, total sales revenue. Okay, by sales revenue, total sales revenue will be taken, as well as closing stock will be taken. Whatever the closing stock will be there, that will also be entered in the credit side of trading account. Okay, now once we total this, the debit and credit, the remaining balance generally is either gross profit. If it is coming in debit side, it will be gross profit. If it is on the credit side, it will be gross loss. Okay, now most of the companies, if they are making gross loss, they will understand that we have to decrease the manufacturing cost. Okay, that we'll understand in cost accounting and the next sem. Right now we are only into the financial accounting. Okay, so this is trading account. Okay, so cost of goods sold is, what is the formula for cost of goods sold? Opening stock plus purchases plus direct expenses minus closing stock, that is cost of goods sold, because closing stock is not yet sold, it is still there. Okay, so cost of goods sold is opening stock plus purchases plus direct expenses minus closing stock. Okay, and gross profit is sales revenue minus COGS, cost of goods sold, or the trading account, sales revenue plus closing stock minus all these debit items, opening stock, purchases, direct expenses. Clear? Good. Now let's move on to the profit and loss account. Now this account takes the gross profit we just calculated and then subtracts all the other expenses that the business incurred to operate it. Okay, now this helps us arrive at the net profit, which is the ultimate measure of the company's profitability. Now, generally, whenever we look at if the company is profitable or not, we don't look at the gross profit. We look at the net profit of the company. Even the government or anyone, they look at the net profit of the company. That even the taxes are paid on the net profit, not on the gross profit. Okay, now let's try to understand how to come to a net profit. A P&L account is made. Now in front of you is an simple example, simple format of how a P&L account will look. The gross profit which we have calculated here, okay, is taken, because it's on the debit side here, is taken forward on the credit side, gross profit. Okay, then from gross profit, all the expenses, the operating expenses, it could be salaries to staff, it could be marketing expenses, all these expenses are taken here. And then we also entered the financial expenses. Financial expenses could be the bank charges, the interest paid, everything will come here. And then depreciation. Depreciation is charged, is a charge to P&L account, right? So depreciation has to be charged here. So depreciation calculated, and depreciation will also be entered into P&L account. Okay, for more information on depreciation, look at our past videos on depreciation. Okay, and on the credit side again, after gross profit, we also add up any other income we had, indirect income, which is not related to your trading or manufacturing. You might get a income, say for example, if you have an say you have a land, okay, a part in the factory area, you also have a land and you have rented it, you have given it on rent. So the rental revenue of that office or the factory land will also be an indirect income. So that will be added here. Commission received, if you have received any commission, will be added here. Interest received, any interest which you have received from parties or customers, okay, that will also be added here. Okay, so all income will be on the right side, on the credit side, gross profit and all other income. Okay, so if we deduct this gross profit from all, if you deduct all the expenses from your gross profit and other income, you will get the net profit. So net profit is equal to gross profit plus other income minus operating expenses. Not all expenses. Direct expenses we have already taken there on the trading account. Okay, direct expenses we have already taken there. Here we only take indirect expenses, that is operating expenses. Okay, so gross profit plus other income minus operating expense minus financial expenses, that is like bank interest or bank charges, minus depreciation. You will get a net profit out of it. Okay, have you understood it? Okay, so the net profit is what is left for the owners or the shareholders after all the bills have been paid. This is the crucial number for understanding the overall financial health of any business. Okay, let's actually look at a complete example to tie it together. Now, here you can see how the trading account is prepared first to find a gross profit. Okay, then a gross profit is carried over to the P&L account, and from P&L account, from the gross profit, we deduct all the expenses to arrive at the net profit. Okay, let's look at it as an example again. For trading account, opening stock, say the opening stock is 1,10,000. Purchases of raw material as well as for finished product is 90,000. Comes in trading account. Direct wages. Direct wages is a direct expense. Wages to factory members, factory laborers is a direct expense because it is used for production, right? Okay, and on the left side, on the right side, total sales for that period, and then closing stock as on that period. Okay, so now what we do is, first we total both columns on the trading account. If you look on the right side of trading account, that is excess. So 2,80,000 is the total. So 2,80,000 minus 1,10,000 minus 90,000. Understood? 2,80,000 total of sales plus closing stock minus opening stock 1,10,000 minus purchases 90,000 minus direct wages 30,000 will give you the gross profit. Understood? Okay, here if you see 2000, 2,80,000 minus 1,10,000, 90, 30, 50, 90, 30. So 50,000 is your gross profit. Okay, now this till here, this is called your trading account. Now this from here it is profit and loss account. Okay, so after the gross profit or gross loss is calculated, it is taken forward to the P&L account. Now this is gross profit, so this is taken forward by GP, by gross profit here 50,000. Okay, now what are the operative expenses? It will be given in the trial balance. So office rent, indirect expense, salaries, indirect expense, interest paid, indirect finance expenses, advertisement, marketing expense here only, depreciation on machinery, depreciation is calculated and then it is also placed here, it's charged in the P&L account. And here the right side, apart from gross profit, if they have received any other income not related to their business, that is indirect income, not relevant to this business, okay, not for purchases, not for sales, not for the factory, but any other interest, any other income received is basically taken here. Okay, so by interest received 11,000, if commission is received it will be here, if say any other income, as I said, rent is received, it will be here. Okay, so now this is totaled. Okay, we total this 50 plus 11, 61,000. This is the total of your P&L. 61,000 minus 10,000 office rent, 12,000 salaries, 5,000 interest paid, 4,000 advertisement, 5,000 depreciation. If you deduct all this, you will get the net P&L account. 25,000 is your net profit. If this side is extra and this side is less, if this side is more and this side is less, then instead of net profit you will get by net loss. Okay, so this is how your your trading P&L account will look. Look at it once again to understand everything. Okay, now let's actually try to understand what are the key takeaways. What did we learn today? Manufacturers make money by transforming raw materials into finished goods and selling them at a better price than their production cost. Okay, traders will also buy products and sell the products at a higher cost than what they have bought. Okay, and trading account focuses on cost of production to calculate the gross profit. Trading account basically calculate the gross profit, and it does by focusing more on direct costs of production. Okay, right. The profit and loss account takes the gross profit, subtracts all other operating expenses to arrive at the net profit. Okay, so net profit is equal to gross profit plus any other income minus all indirect expenses will give you net profit. Okay, understanding these accounts is essential to know if the manufacturing business or the trading business is making money in a long run, if it is profitable or not. Okay, now thank you for learning about the manufacturing, trading and profit and loss account with me. Okay, remember this is a very simplified view. Real world accounting can be more complex. If you are doing problems from your textbooks, it will be more complicated, but you have to practice more and more, okay, to actually understand how things work, how things are taken into trading account and profit and loss account, which are the things, which are the expenses which are directly incurred for productions. You have to understand a lot. So the more practice you do, the more it will help you understand what are the direct expenses and indirect expenses. Okay, Now, thank you. I hope this might have helped you in understanding and preparing trading and profit and loss account. Have a nice day. Let's meet again in our next video. Bye.